Hey there, friends. What's going on in the real estate market? I'm here to share what's happening with you as we surge into the spring market. There's lots of great things going on, and it's one of those rare occasions where it actually is a great time to buy or to sell. But let me break it down for you. Hey, Ken Brand here, Better Homes and Gardens, Gary Green in the Woodlands with the market report here. So let me share what's going on. In this chart here, what we see is over the past 3 years, we track listings that have gone under contract month by month. So we look at February of last month, all brokers combined, there were 178. February of the year before, there were 175. Last year was a good, strong sales month. So what we're seeing here is good, strong sales velocity. You can see the seasonality here as we get into the spring and summer months, sales begin to really pop, right? So this is great for sellers. For buyers, what this means is you got to move quickly when you find what you want because a lot of buyers in the marketplace. Now let's take a look at these under contract prices. Generally, over the last 6 to 8 months, the average listing going under contract's been in the low kind of mid 400s. This month, February, what happened was that the average price that went under contract was 520, and the median, half of these 178 sales were below 409 and half above. And then another interesting factor is that average days on the market. How long are these properties on the market before they go under contract? Average number of days on the market for homes that went under contract in February is 53. In January, that number was 72, 73. So it's fallen by over 20 days, a few over that. Median days on the market, 178 sales, half of those sales sold in 23 days or less. So if you have your home merchandise, marketed professionally, working with a great agent, then you're going to have to be ready to move quickly because the market is your friend, right? So great time for sellers to be thinking about selling because the market is great. Now, let's take a look at what buyers have to choose from. Inventory, all brokers combined, there's 534 listings on the market. That's 10% less than last year at this time at just under 600, right, at 599. So for buyers, 10%, the selection is 10% less. So when you find what you want, you have to move quickly. So you'd say, well, Ken, if it's a seller's market, why would it be good for buyers? How can it be good for both? Well, the reason for that is mortgage rates are historic low. Look at this. I ran this off yesterday, 3.49. This is the lowest it's been since 2015, and it's actually lower than that today. We were at our sales meeting today, and Michael Timmons with Gibraltar Mortgage, a super great mortgage guy, was telling us that with good credit, a 15-year fixed is at like 2.7, 2.8. So we're going to see this number drop down to 3.2 or whatever. Now keep in mind, if you're buying, find the property you want, negotiate a contract, lock in your rate, and then float down. So if this rate drops down in the next 30, 45 days from the time you go under contract, you get to take advantage of the lower rate. So why is it good market for buyers? Because these low rates mean more buying power. You get more money for your house. It was just 3, 4, 5, 6 months ago that these rates weren't at 3.25 or 3.4. They were 4, 4.5, right? An extra percent higher. Well, that means about 25, 30% more purchasing power just because of the mortgage rates. And then we look at this graph here. What do you get for your money? At 3.5% mortgage for a $100,000 loan, it's 463. You can see just a little while ago, at 4.5, it was 506, right? So 50 per 100, and then this chart goes over here. So great time to buy. So for sellers, again, reinforcing that idea, great time for sellers. It's a seller's market. And then when you sell your property and go to purchase your next property where they move up, down, sideways, is you're going to be able to take advantage of these lower rates and get more for your money. So the perfect time to make a move. If you're a buyer, then there's a little more competition, right? And you got to move quickly, but you're still able to take advantage of those super low rates, which is great, right? More purchasing power. And then this little graph here talks about month supply of inventory. What are we looking at here? Green means it's a seller's market up to $1 million. So below $1 million, it's a seller's market. These are in price bands. So in the Woodlands, all combined is 2.9. But what you want to look is what price range are you in, and what is the supply of inventory? Now, keep in mind, what does month supply of inventory mean? So real estate economists tell us that 6 months supply, 6 months of supply is a balanced market between buyers and sellers. The lower we go below 6, the better the seller's market is. The higher we go above 6, the better the buyer's market is. So we're in a pretty strong seller's market in all these price ranges. Right now, under 200,000 in the Woodlands, there's only 3 listings available. 2 to 300, 1.3 months of supply. 6 to 700, 3.3 months. Where it starts to shift as we get over to $1 million to $1.5 million, then there's a year's supply of inventory. We get into 2 to 2.5, there's 27 months. Over 2.5, 57 months, right? All combined 2.9 months. So all of these together add up to a super strong market. And then here we track by price range, contracts, and sales. So you might want to take a look at that. So I wanted to share this information with you. The Woodlands is a super strong market. It's a seller's market below $1 million. Buyers need to move quick, but everybody's going to be able to take advantage of these low mortgage rates to increase their purchasing power. So I hope you find this useful. If you have any specific questions about how we can help you here at Better Homes and Gardens, Gary Green, don't hesitate to call me. Thanks for your time and attention. I'll talk to you later. I appreciate you. Thank you.